Welcome to the Silent Trading channel on Monday the 16th of March. Today I'll be analyzing the gold chart with you guys to check and see if the direction is going to be on the downward side or the upward side, right? But before you guys watch, please subscribe, like, comment and share if you like this video and to support me in my trading journal. Today I'm going to be starting on the daily time frame. As we can see on the daily time frame that the price right now has both create a bottom and a top wick, which means right now we are not going to be entering a trade, right? We are not looking to entering a trade from this position. Because why? Because since both wick are created right now, since this candle has produced both sides of the wick, we are not going to be entering a trade unless the candle managed to push past the previous high, which is this initial wick. Which means right now if you're going to enter a sell position, this candle right now has pushed past its own wick and then push up further before we can start entering a sell or a short position, and then anticipate, right? Wait for it to pull back. Or if you're going to enter a buy position, wait for this candle to push down, right? Push down, break past its initial wick to go lower, right, to creating a new low before you can start buying, and then anticipate the chart or the candle to start pulling back. Correct? So right now we are not going to be entering a trade based on the daily time frame or the daily candle, because right now both sides of the wick are created and we do not know where the chart is going to be, ending up going to, right? So on the daily time frame, we are not going to be entering a trade, so we'll hold on for now, and then we'll lower down to the 4-hour time frame and see what the 4-hour time frame right now is doing. The 4-hour time frame right now has started to try and create a bullish price action. Correct? Where is this bullish price action? Over here. This is a bullish price action. Price action is what? Price action is the action shown by the chart of the previous candle that it leaves behind. So this is a bullish price action, but is it complete yet? Nope. A complete bullish price action should always be, this bullish price action should always be able to break resistance. Right now it has already attacked the resistance but not yet broken. Correct? So we wait for this bullish price action to be complete before we can start buying. And once this bullish price action is complete, we can then call it a valid bullish price action. And then the next candle, right, the next candle retracement is where we're gonna buy. Correct? The next candle retracement, while not touching the next support, it is where we're gonna be buying. So we can either place a buy limit at this wick over here, right, this low red wick over here. So when the chart on the next candle push down to producing a bottom wick, and after producing bottom wick and it start pulling back and then start pushing upwards, this is where we know that our position is the correct one, right? But if not, if the chart open on the first candle, push up to create a top wick first and then start pulling back and then start slowly going on a sideways down direction, our buy limit over here should be closed. Because if the chart is really going to go on a sideways down, right, a sideways downside direction, it means that the chart is going to start accumulating buy side volumes again, right? So if it is going down in a sideways, it is starting to accumulate buy side volume. So if the chart is accumulating buy side volume, we are not going to buy, because buy side volume that is accumulated over here is buy side volume from the retail traders. So we are not going to be doing the same thing as the retail traders. Correct? So when the chart is accumulating buy side volume, we are not going to buy unless that buy side volume has been taken out, either by a break below, right, or at least wait for the chart to produce another bullish price action in this zone without touching this support. That is the best possible way that I'm going to enter a position, right? So for now, we wait for this bullish price action to be complete, right? If this bullish price action is complete, this is what we call a valid bullish price action or a legit bullish price action. And after that, the next candle retracement is where we're going to buy, but also based on the next candle retracement of how it is going to retrace. If it is slowly sidewaying down, going to support. If it is slowly sidewaying down to support, right? Which means this support is becoming weaker and weaker. But if it is just dropping down and you buy, and then suddenly it pulls back up and starts slowly going to a sideways up direction, you can be sure that this bullish price action and this bullish structure is a strong one, right? If the chart is going on a sideways up direction, this bullish price action is a strong one, because chart going on a sideways up direction is the chart trying to accumulate sell side volume on every single resistance it goes to attack, right? So every single resistance that is triggered, which means there are sell limits, which means there are people waiting to sell at every single resistance, which means when the chart is accumulating sell side volume at resistance, the chart is slowly going up further and further, correct? So this is how we look at the structure of the chart. We wait for every single price action to be complete and confirmed before we can start buying at retracement, before we can start selling at retracement. But never before this thing happens, we never enter a trade, right? So right now, this 4-hour price action needs to be complete. And once it is complete, it becomes a valid bullish price action. We can then start buying, right? But if not, if at the last 30 minutes, if at the last 15 minutes, the chart suddenly decides to pull back, we are not going to be entering a buy position, because it will be too risky. Because why? A sudden pullback before the closing, it means that buyers start closing their position, or either sellers start selling too much and the chart is looking to drop, right? But the problem is, when retail traders start selling, the chart is bound to go up. When the retail traders start selling, the chart is bound to go. When the retail traders start selling, the chart is bound to go up, right? It will always goes against the retail traders. If the retail traders are buying, the chart will start to go downwards. Because why? Because the big money never allows the small money to win over them. Only on some occasion that they will allow the small money to win a few multiple position per day, right? A few multiple small position per day, but they will never allow retail traders to achieve big win easily, right? It isn't an impossible feat, but it is not that easily to be achieving big win on the market if you do not understand the market thoroughly enough, right? If you do not understand the market in detail sense, in detail information, if you do not really understand the market, you can never win on a big position. You can never win big. You'll only gain small wins, small pips win, and then lose big one, correct? So this is what I'm trying to get you guys to do, is to try and achieve big win for once. And to achieve that, you need to be able to understand the chart based on price action, based on price movement, based on bar action. Bar action is price action is all of this candle that the chart has left behind, but the bar action is the candle that is moving right now, right? So you need to be able to understand both price action and then bar action, and after that you need to be able to understand each and every movement of the chart, be it a tick above, a tick below. You need to understand. If you understand all of this, you're going to be able to anticipate the best possible price to buy, the best possible price to sell, right? Because the best possible price to buy and sell is the spot that there will be no retail traders looking to enter a trade, that there will be no retail traders buy limits and sell limits at that spot. that will be the best possible spot to buy and sell. Correct? And the last thing is human psychology. If you can understand human psychology, you will know which is a spot that people will start panic buying and panic selling, or which is a spot that people will start going against a trend and then continuously going against a trend. Correct? Because if you understand all of this, you will never be losing ever again. I guarantee you, you'll never be losing ever again, because this is actually the basic information, the most basic information of the chart. But this basic information, it took a really long time to master it, because you do understand price action, you do understand chart pattern, but do you really understand the detailed information behind every single price action there is? Do you understand every single detailed information behind every chart pattern that is created? Why is it that the same chart pattern sometimes could make the price break above, but sometimes the same chart pattern or the same price action could make the chart break below? Because the same chart pattern, the same price action doesn't mean that the chart will have to respect that specific price action. Sometimes it also depends on bar action. It also depends on human psychology, because if that price action is really an accurate one and everyone is looking to buy at that specific price action, what do you think the big money is going to do? If everyone is buying at a specific price action, at a specific chart pattern, what do you think the big money is going to do? The big money is going to dump on the chart and then sweep all of your stop loss before it can go on its initial trend. Correct? So the real thing over here is to try and understand why every chart pattern always does different thing. Some chart pattern on the same one, today it will go upwards. Why tomorrow it start going downwards? Because the secret lies between every single movement of every single candle. Where is it accumulating buy side volume? Where is it accumulating sell side volume? Where is it taking out and clearing off buy side and sell side volume? Where is a spot that it is trying to pressure position holders into closing their position? That is how you understand whether each chart pattern and price action is going to work or not, right? So never only watch based on chart pattern, based on price action. Anyone can draw that. Anyone can look on the Google map, find a price action, find a chart pattern, find a candle pattern, and then draw that on the chart. But the real secret is to try and understand the reasoning behind each of that chart pattern's movement, right? So today, I'll let you guys do your own homework. Try and watch the chart, what it is doing. Try and compare every single chart pattern that has a similar chart pattern but a different movement after that chart pattern, about why is it doing so, where does it start accumulating that side of the volume to clear off, why is it happening the opposite side every single time. Sometimes a bullish flag can make the price go bullish, can make the expansion start to go upwards, right? But sometimes a bullish flag suddenly make the price dump on the chart. Why is it so? Because everything lies in the price action of that candle, of that chart pattern. How does it move in that bullish flag pattern? How is it accumulating volumes in that bullish chart flag pattern, right? So this is your guys' homework. Try and keep statistic, right? Try and compare. Note down some detailed information, some key information about why is it doing so. Because the real secret is not to be buying and selling based on everything they're telling you. The secret is to be understanding every single thing they're telling you to the most detailed sense of that information to be able to win against the big money. But you'll never win against the big money, but you're just going along with the flow and win along with them, right? So for today, this is all I'm going to be saying, and I look forward to be analyzing the chart with you guys tomorrow. So stay tuned to my videos tomorrow, and for today I'll see you guys. See ya.